Hey, how's it going?
Hi, everything's awesome. Well,
Good.
again, depending on who you ask about what's going on in the real estate world today.
No, 100%.
Yep.
So with me, I've got Amelia. I'm Brett, one half of Brett and Ray, and this is sort of a precursor to the Brett and Ray Naked Real Estate podcast. We're just getting some conversations under our belt, and so you're stuck with just half of us, um, but that's hopefully okay. Amelia, you've got your own YouTube channel as well.
Yes, at our Realtor Cares. So again, I've been launching a team this year, making a little more effort to be present online. I feel it really is probably the best way for me to communicate with more people and allow people a chance to get to know, like, and trust me a little bit.
100%. And you've got some great conversation topics that you wanted to share.
Yeah.
What's on your mind right now?
Well, you know what? I hear so often right now so much negativity around the real estate market and what's going on, when in reality, as you know, and as us that are in the know, it is an incredible opportunity right now for investors, for people getting into the market, even for people upsizing. The real estate market is never bad. It's always good and bad, depending on where you're sitting and your perspective of the market. So, yes, if you want to get out of the market, well, there's lots of doom and gloom over the last few years. But if you're looking to get into the market, get into some smart investing. Oh my gosh, it is a gold mine out there right now with some of the deals that are happening.
Yeah.
So I'm
And you've
really,
always worked with investors, right? Like going
oh yeah,
back.
yeah, yeah. I've got a history with investors as well for quite a time now, and I also have a commercial aspect to my business as well as residential sales. So, Brett, what are the biggest mistakes people are making given everything going on in the world right now when it comes to investments? And I would love for us to follow that up. Could you please share with the world some, you know, this is one of my other pet peeves when it came to doing social media. I started really realizing like there's so much crap out there online. There's so much misinformation. So I thought, I don't know if people want to listen to me or get to know me or not, but I would love to do my part to try to share some accurate, honest, direct information for people that are out there looking for answers around this sort of stuff. So, what are the biggest mistakes people are making when it comes to real estate investing today? And what are some smart strategies and planning that they can utilize to make sure that they're going to be successful and that'll be financially rewarding down the road?
Rayanne had a great post a couple of weeks ago, and it basically talked about inaction is a decision.
Mhm.
So doing nothing is still a decision. So when people, whether they're fearful of the market or not, they have the opportunity to at least discuss it and not let just fear or not wanting to make a mistake drive their choices. So having discussions with people that are out there every day dealing with buyers, dealing with sellers, dealing with investors, that's going to allow them to make the right decisions, um, regardless of what direction they want to go. And it may be that they just hold pat, but at least they're making an educated decision to do that.
So, what would step one be? Let's say I've got, a family that's curious about getting into their first investment. Often I see one partner is very intrigued, very excited about the opportunities, has seen somebody run the numbers and realized, potentially what it could do for generational wealth and these sort of things. But oftentimes there's one partner who's feeling really nervous, really insecure about it, not feeling comfortable about taking on perceived risk. And again, especially with everything going on in the world right now. So, what would be the best first steps for them to help them feel and to help that, potentially nervous person feel safe and secure about making a move and, given the opportunities we have today?
Yeah. Talking to their advisors, right? So anytime that we had, I'll say a cold call,
Mhm.
we used to do the Mortgage Minute radio show on Magic FM there in Guelph. And anytime that we'd have a call off of that, it was people that were in um, financial distress. And the reason being, and what we came to learn was those were people that didn't have that network of people that they wanted to work with. They didn't, you know, deal with a financial advisor, a lawyer, a realtor. And I'm not talking about a transaction-based realtor. I'm talking about somebody who's actually going to sit down and listen and say, "Hey, um, what should your next steps be?" And today, it's so easy to educate yourself on how to invest in different things, whether that's private equity, real estate, mutual funds, like all the different things that are out there. So when we're talking about financial advisors, you want to be talking to somebody who's going to incorporate real estate into your overall portfolio. That it's not just, hey, you need to buy this universal life insurance policy, and it's going to be the be all and end all. That they're not product based, that they're information based.
Yeah, and actually, I just want to follow that up and say you are so right. As an investor and a landlord myself, the things I have learned over the years that I know today, I would have set up my financing differently. I would have cash downed off my primary residence right off the front. And that was not something a direct mortgage broker was able to guide me through. That was something I hired a professional advisor for assistance with, coordinating with accountant, financial advisor, and of course, as a realtor myself. But again, having all that guidance there makes a huge difference to
Yeah,
tax savings and being able to leverage a better cash flow at the end of the day as well.
yeah. Because my background, so I came out of the financial planning world. I finished up at Laurier, and all I ever wanted to do going through school was to be a financial advisor. And
That's when I
my
joke. So what happened, Brett?
yeah, well, again, not to make light of it,
Yeah.
because it always sounds like I'm making light of it, but a couple people decided it'd be a good idea to fly some planes into a couple buildings in New York, and
That.
it really took the fun out of the planning aspect. The best laid plans in the world. It didn't really mean a whole lot when world events like that happen, and it might be where we are today, right? Where we saw it with COVID, we saw it with potentially right now, where you have a multi-generational event occurring that will have ripple effects throughout the market, throughout real estate, throughout the world. And for me, what was, again, not funny, but what I took away from that was everyone and their brother that we were working with on the financial planning side called that day. And we were happy to talk to them. We walked them through, and here's what you can do, here's what you really can't do, shouldn't do, all that stuff. The people that didn't call me were my tenants, right? They still needed a place to live. They still needed a home. So for us, it was evident that that was the direction that I really wanted to take my overall practice. That we wanted to work with investors that were in a more holistic view. So let's look at yes, have stocks and bonds, absolutely, right. I'm never someone who says, hey, you can't shy away from those things. It's But you need to have stuff, and we love real estate because you can reach out, touch it, and you know where it is, and know what it is, and that sort of stuff. So if you're making educated decisions and not rash, passionate decisions about, oh, everybody else is buying, so I need to buy now. No, I'm talking about stuff that, hey, does this make sense for me now, 5 years from now, 10 years from now? What happens if interest rates do whatever they do? And there's been enough times between that time frame and today where I look back and I say, okay, there are certain time frames that have certain opportunities, and now is truly one of those. And you have to take advantage. You have to strike while the iron's hot, if you will. So we're getting out there and talking to as many people as we can about certain investment opportunities with respect to real estate. And I know you're doing the same, right? Because you see it. Like, what are you seeing right now?
Well, I see right now, again, some of the opportunities passing by right now. And the only thing when it comes to investor clients and being an investor myself is, unfortunately, with the market and the prices being down, it's a great opportunity to buy more, but only if I actually have equity to pull from. So
Yeah,
again, it has hit equity a little bit. That being said, something I was told a long time ago, and it sat with me very much so, and I would love to share, is to think about when you're looking at safe investments or what is safe, where do the banks invest all their money? What do the banks invest in? Because banks, in my mind, have one purpose in this world, and it's making more money. Where do the banks put their money? What are they very happy to loan against? The answer is very simple. It's one thing, it's real estate. So,
yeah, no, absolutely, and that's the thing. So 2001, we had some clients that had leveraged against their own portfolio,
mhm,
and when the value dropped, banks called real quick. Hey,
yeah,
margin call. You need to, and that just exacerbated every issue that they had. So not only was their portfolio going down, but they had to find a way to pay back and sell off some of their portfolio just to
yeah,
pay back the
rest.
banks,
Yeah.
right? You're
Mhm.
not getting those same margin calls right now if you're making your mortgage payments, right? And yeah, so you're spot on. Yeah, banks certainly, regardless of what's happening in the world, our Canadian banks have always been sort of a beacon of hope, and in terms of employing best practices, they got stung a little bit because of what they were doing in the U.S. market in 2008. But when they look at what was going on in Canada, they
Mhm.
were very very well protected. As much as I'm against some of the qualifying rates and stuff like that, it has protected the Canadian market as a whole.
Yes, and if you're referring to those stress rates, I would suggest that as much as there was a lot of negativity from people when they came in place, I'm sure there's a lot of people that are still sitting in their houses that might have had to lose them through power of sale if they hadn't been put in place when they did. So
Yeah,
it is what it is. I, for one, have seen it do some good as much as it did hurt a little bit to feel the pressure from a little bit less. So,
yeah,
what I'm hearing from you is that having the right team in place, doing your research, getting educated, not following peer pressure, trends that you're seeing online, but getting the correct information from the right individuals who are experienced in the field of investment, not just accounting or real estate, but in investment specific, same with financial planners and things too. Now, with all of this in place, that's avoiding some of the biggest mistakes and getting some of the best guidance. So, do you have any tips or tricks for people that are going to set up this team, starting to get the right advice as to how to make some smart moves moving forward? I'll start with one little tidbit again. All my best tidbits have been gifted to me from others who know more than me over the years, but this one was, if you're going to look into investing and buying a bunch of properties, try to keep it within about, you know, 30, 50 kilometers from your house. Because if you're going to be overseeing some of these investments yourself versus, again, losing some margin and some cash flow to property management, not that that's not sometimes the right way to go, depending on your situation, that it's good to have them close because if you have something in another province or in another country, it can be very expensive and you can tend to get screwed over on repair bills and things like this when you're not present to look after it, keep an eye on it, and these sort of things. So, that's one I have. I bet you've got a few more for us.
I don't disagree with that. If it's a property that you're trying to manage yourself, I think there are spots in the province right now that may be better suited to long-term rentals than maybe somebody's backyard. You should always look to your backyard first, and I think people overlook that. But like we've got a bunch of properties right now up in Saugeen Shores that we're working to develop and build out for clients. They right now with Bruce Power doing its retrofit and then moving on to Bruce C, which you know, you can imagine the number of employees and tradespeople that they require to expand a nuclear power plant. So the job creation up in that area is astronomical, and so we're following that a little bit just to again balance out our portfolio, and we're looking abroad too. So we've got my brother's in Mexico. We're talking to him on a regular basis on what's going on in the Mexican market and seeing what type of rental properties he's got available and that sort of stuff. So it allows us to keep perspective of how good the investments are here because now you're comparing this property to that property and say what why is this only a 6% cap or why is this an 8% cap when we can get this type of cap rate elsewhere and what is that it's just reshaping your mindset to be able to keep focused on what your goals are.
So, on the topic of cap rates, I'm curious. I've got two questions for you actually from that.
Yeah,
One, yeah, okay, I'll save that one. So the one around cap rates again, historically what I've noticed is that going outside city centers to rural areas, generally you can get a much higher cap rate on your investments. However, you also deal with much more vacancy rates and things like this that can cause some grief as well. Is that accurate? Is that something that you find in general, or do you find there's more
I wholeheartedly
specific
agree.
pockets?
Yeah, no. So one of the videos I did recently, I talked about Skyline, and Skyline they focus on um, I won't say small markets, but they're not afraid to go outside of Toronto and Mississauga and that sort of stuff. So they've built buildings, they've purchased buildings up in like Port Elgin, Southampton area. They've got their portfolio started in Guelph, so probably when Guelph was around 100,000 in population. Um, but they look to tertiary markets in order to elevate their cap. And they've also got to your point about commercial side. So they've got a new fund that is strip plazas, grocery stores, that sort of stuff. And they look to markets that have smaller populations because then they know that strip mall is the only game in town.
Yep.
That they once they control it, the if you want to be a grocery store, you're in their mall, and it's
Like owning the only laundromat in town in cottage
yeah,
country.
well, exactly, exactly.
All right, awesome. Well, my other question for you is definitely off topic a little bit, but I can't resist. So,
Okay,
if you had to pick between the USA and Mexico, what is the safer country to invest in for somebody who's traveling over the winter?
so for
Again,
me, I look at I would probably choose Mexico. So we've looked at the Palm Springs market. It's a beautiful location. Rayanne's mom lives there half the year and absolutely loves it. Speaks highly of it. We visited it once, um, and super nice. But I think right now you have to look at weather patterns, like ongoing weather patterns. That is a key concern. So if not Mexico, then some of the ABCs, if you will, Aruba, um, uh, Curacao is the C, and Bonaire being the B. So you've got properties there that kind of avoid that hurricane season, which would be nice. But there's certain spots in Mexico where I think you've got absolutely fantastic um, opportunities. And but again, you talk about a professional network being required. You need people here in Canada. You need people in Mexico. You need to understand what financing looks like down there. The U.S. system is very similar to Canada in that it's province by province versus like state by state in terms of the financing aspect of it. And whereas the Mexican banking system, you want to make sure the title is done properly. You want to make sure that the lawyer's on board and understands exactly what you're looking to do. They have um, for crying out loud, basically it's a bank trust that they put you in, and the name's escaping me right this second because I wasn't expecting this question. So,
That's our
um, but no, that's fine. But I'm just trying to think of what the name of the trust is. But again, you have full ownership. Um, yeah, my brother, lucky enough for him, he ended up having babies down there, was nationalized through that. So he's a reverse dreamer, and has his Mexican nationalism, I guess, to allow him to buy properties directly.
That's awesome. After this winter, I would say it doesn't sound like such a bad place to be at all. I know I've had a lot of people I've known go to Costa Rica as well as another place that's very welcoming to Canadians. And again, it functions very differently. Cool little tidbit. I actually have an app I can send out that links through the network through the company that I'm with to show listings in Costa Rica and Mexico and things like that if anybody's
It's awesome,
interested. Yeah,
nice,
cool. It tastes a little American, but the access is very cool.
brilliant.
Yeah.
Because again, that's their thing. So with looking outside of Canada, you 100% have to have total trust in who you're dealing with.
Yeah.
It's absolutely imperative. People spend so much time researching stuff when they go to rent a place. So you can only imagine what research they need to do to actually purchase it. And this is stuff like that's the thing. It's generational.
Mhm.
Like you buy this with the intent that through generations, your family will enjoy this property. So certainly it's a benefit. And then you get into the tax status, and then you get into the passport status of some of these countries as you look to purchase abroad. It's pretty interesting, but again, right back in your backyard, there's still a plethora of opportunities in Ontario to purchase actual real estate holdings that totally make sense. But if it sounds too good to be true, probably is, and you better do some research. And if the people that you're dealing with aren't prepared to have your lawyer review it or your accountant review it, you got to shy away
Yeah.
because
Big, that's a big red flag right there.
yeah, there's just too many deals going sideways right now where you're like, oh, I probably should have seen a little bit more of that. Um, Someone I actually knew, she was fined $600,000, but it was a $90 million, I'll say, mistake.
Oh,
They haven't gone after her criminally because I think she thought that the investment was still sound. Um, but it's awful, and you just feel for these investors because that money, it's you hope it's pennies on the dollar and that it hasn't evaporated to zero.
yeah, we had something in Guelph recently too that I'm sure you're aware of one of the bigger names in town got into trouble and didn't shut it down in time and is now dealing with a lot of things and a lot of upset investors. So
Yeah.
again,
Well,
I'm,
there's
I'm,
two. There's two in
I'm a
Guelph.
big fan of no surprises and do your education and research first. We
Yeah.
are playing with too much money. And, even if it's a little thing, it's not a little thing for the people who are doing it. It's a big thing. All of the things we deal with in this realm are big things and very important things. So,
Yeah.
again,
A
you
few a
cannot
few
do
years
enough
ago. Yeah.
research.
Yeah. A few years ago, we created a mutual fund trust, and one of the investors that helped us do that. Um, and he brings it up on a regular basis, and he's not wrong. But when you are working with other people's money, uh, it's you know it becomes an obligation. Like it's uh, you don't get to just willy nilly deal with this stuff. It's their money, and you deal with that, and take as best care of it as you can. And we appreciate wholeheartedly what they've done for us in terms of giving us opportunities to go out and build something or purchase something or whatever. So you have to respect that. But so an investor comes to you tomorrow,
Mhm.
and they say, okay, I know that I need to add some form of real estate to my portfolio. What what's the process that you take them through in terms of figuring out what makes sense for them to be involved in the real estate market? And then is there something that you're looking at specifically right now? Um, so with your real estate hat, like what are you telling people?
Well, I first of all, I'm going to have a long conversation with the individual person to figure out their needs, their wants, their likes, their vision, what they're thinking, what's brought them to the point of having this conversation, what's in their mind, how they think that's going to work, and
Yeah,
what that looks like. So once I have a good idea of what their goals are, their ideas, if they've kind of started the conversation around a budget and financing, these sort of things, we'll talk about and look at the connection there next to see what's feasible, what's viable, what numbers make sense, because it either makes sense or you don't do it.
yeah,
And, other than that, talking about the different types of investment depending on the budget that they want to work with. I oftentimes get people who are simply not want to pay rent for their students.
yeah,
They've got one or two kids going to university and they're looking at it going, geez, I'm going to spend how much? Like what? This is going to cost me 100 grand in rent the next couple of years. Like, oh my gosh. No, instead, let's buy something. Let's actually have you. And I've had this happen many times where, 5 years later, they're walking away. Unfortunately, it's a good problem to have to pay some capital gains because they've made a profit off the property. They've offset the mortgage with rents from the students. And as long as they have an actual kid in there to help manage the property, it takes a lot of the headaches away from a student rental. A student rental will cash flow a little bit better than a direct home rented to a family. That being said, I have many investors who've thought, let's try students who, after a few years, have very quickly said, you know what, we're more comfortable going with the families with the less headaches, with a little less trouble. Not that student groups are bad, but they tend to be a little more trouble with new people who haven't been homeowners in the past, moving into properties and excited in school and things like this. Something that has an ADU unit, so a legal basement apartment, or ability to put one in without, too much equity going into it is one of my favorites. It allows you to not necessarily cash flow positive, but to break even on the property usually. And again, if you do it legally, you're protecting your equity. Again, depending on the type of unit, depending on the home, depending on a centralized heating system and these sort of things. That's the one situation where I'm a big fan of electric heat in the basement
yeah.
and less noise transit, things like this, right? Moving into a triplex or larger multi-residential units, of course, can start to show positive cash flow, can be very solid long-term investments, can be harder to obtain and find, and the cap rates and things like this, depending on the location of them. Um,
Hmm.
and then it depends on the individual. Hey, if you're a business owner, you don't need a rental to rent to families. Let's buy a building for your business and stop paying rent. Be your own landlord and then rent the other piece of it and maybe even cash flow positive. So, I really feel it depends on the individual, the people, the partners, the family, their needs, their vision. At the end of the day, if you like it and the numbers make sense, do it. If you don't like it, don't talk yourself into it. Just walk away. We'll find one that you do.
Yeah. I look back and Ballmer Management was fantastic to work with in terms of our rental. And but if I went back to 2005 when we first started renting from them
Mhm.
and had taken all of the money that we gave them,
Yeah.
my goodness, the size of the mortgage payment that that would have provided, we, we could have owned, a good chunk of Guelph. It feels like, but we decided to rent, and um, we were just fortunate that our landlord was as good as they were. But yeah, you mentioned multi-res. Um, we've had this conversation before, not on camera, but we're huge advocates of it right now. And I think that the biggest benefit was what you touched on briefly there, the economies of scale. And now I can hire a property manager and I don't have to deal with families or students or people or tenants in general. And um, I might run into a headache or two, but I've got professionals working for me that I myself am not getting the phone call at 3 a.m. because I've got a clogged toilet or
Yeah.
some
Or,
other
or
ridiculous.
maybe somebody forgot to change the furnace filter and the furnace shut off in the winter. I've had that one come up before.
Yeah,
Yeah.
yeah. Or they just took the filter out altogether, and now it's anyway.
Yeah,
Yeah,
and just for everybody out there listening, when you hire a property management company, again, the average cost to you on a residential property is going to be in the ballpark, and you can do better and you can do worse, of about 10% of your rent coming in for the year. And that then removes, you're still responsible for, of course, any work and things happening, but you don't have to touch it. They do everything. You simply just allow them to take a piece out
yeah,
of their paychecks coming in. So.
yeah. And when I talk to people that have extensive rental properties, they either do it full time or they have a property management company that they've hired and have taken away their headaches. Because when you talk to people at the other end of the spectrum that have a couple of rentals, why did they not expand? Because they don't want to take on more work. And they're fearful that if they continue to add more properties, that it's just going to be too much and burn them out. So, you know, I don't want to touch on it too much. Um,
I really feel like we could probably have about 20 conversations just around the topic of today because there's so many
yeah,
different tangents and ways we could go with it.
yeah.
So, yeah.
But the one thing that I'll just touch on and move away from, if you look at any of my YouTube videos at all, 99% of them are about the MLI Select program because I'm truly fearful that this is one of the programs that is going to be discontinued in the not too distant future by CMHC, or skewed to such a point where it is unrecognizable. Right. So maybe they still leave it. Maybe they still call it the same thing. But again, if it's not the same thing, it doesn't do what it's designed to do. Right now, we've got all these programs by CMHC, federal government, provincial government, municipalities, uh, all designed to add additional housing units in their city or town. And it's crazy to me that people don't want to take advantage of it. And then 2 years from now, they're going to say, oh, I'd like to do this. And it's like, well, it would have worked back in 2026 had you taken advantage of it. And the old adage of, when all the people are heading north, it's time to look south because, it's that herd mentality. If they shy away from one thing or are driven toward something, you want to be looking at, okay, what opportunities in the other direction are there? And maybe they're right. Okay. But again, you want to have that intelligent discussion with the professionals around you to say, hey, what can I do right now that's going to help me now, 5 years from now, 10 years from now, 20 years from now? And if it's talking to your lawyer, accountant, financial planner, realtor, mortgage broker, all these different people, if you have the right professional where they're actually looking at your situation and they're not just, giving you the cookie cutter version, there really are opportunities, and um, I think at the end of the day, so you need it's capital intensive upfront, and I get that. But people who are looking to get into multi-res stuff, if they can find a way to get the money up front, there are huge opportunities at the back end to say, okay, we're either going to sell that property for them or um, refinance and get all of their original capital back. So now all of a sudden you've got this 15, 20, $30 million building or buildings that are generating cash flow that you're not managing because you've got the economies of scale to have a proper property management company, and but you don't have any of your own capital invested in it anymore. And I just think, when that dries up and disappears, people are going to be, oh, I wish whatever.
Yeah, I guarantee you that most of the people listening to this have no concept of exactly the what that means and the impact that can have. Many of you will. I'm sure many of you do, but there's definitely people listening who are going to go, okay, but I don't really understand how does that work. So, if you want to give us just kind of like the sort of what was that book they used to have, for dummies kind of thing version for
Yeah,
it?
yeah. The high
For
level, so
me,
the high
and
level side of things.
it's
So
basically,
MLI Select.
you got to put the money in, but through this program, you can get it all back out and keep putting it
Yeah,
into new things and getting it out,
yeah.
something like that, right?
So if you are an investor looking to do this, and you hire a builder to build it for them, to build it for you, you're coming to the table. Let's say you find a piece of land that is $2 million, and I'm making that number up, but it's pretty close. Let's say $2 million to buy that outright. Right, you're going to probably need $1 million, right, just before you even get started.
Yeah.
Then you
Getting
need to
vacant
figure out,
land, you definitely need some money down up front. So,
yeah, yeah. So you spend $2 million on piece of land. You're coming to the table with $1 million. But through MLI Select, if you've got your I's dotted, T's crossed, and um, you're working with professionals who have done this before, your offer is going to be contingent on having an approval through this process. You're not buying a piece of land that is quote unquote raw, where you've got no zoning, no this, no that, like it's just zoned future development. That's gonna be tough. You're not gonna be able to do that within the conditional period. But if you find an infill property, let's say, or maybe a land assembly of a couple houses, whatever, you the MLI Select program, you can finance up to 95% loan to cost. Unheard of, right? So
so just for those who don't know, what's the normal loan to cost, the loan to value that the banks would give if this program wasn't in place?
65, right? Maybe 85, depending on what type of lender that you're dealing with. But they really don't want to do vacant land. They don't, so you're going to have a whole set of drafts, but you're going to need money for architects just to finalize the drawings. You're going to need money for engineers to talk about the servicing and site plan itself. If you're doing 10 units or less, you don't need to go through the site plan process, but you do need to take all the stuff that you would have done for site plan and part of the building permit. So you do need some money. But let's take an example that I'm very familiar with and I've talked about on other videos. You buy a property and you build it out and you put a proper, we have an appraisal for it, and the end value is said to be $12 million. Okay. So typically with a conventional mortgage, you can finance 75% loan to value. Okay. So when it's done, so if you're buying this building that's been completed, you're buying it, you're 75% loan to value. So you require $3 million. Okay. Or through the MLI Select, 95% financing of loan to value at the back end. So you say, okay, it's $12 million value. You're getting basically an extra, call it $2 million. And the cost is far less than what you're able to finance. So all the money that you had put in initially, that you've scraped together, whether you've taken it out of other portfolio, that you've refinanced your own personal properties, other properties, begged, borrowed, and stole from family members to get this going, you get all that back. And because of the type of program that it is, where they are really advocating for new housing, they are going to give you extended amortization. They're going to give you best rates because now it's an insured product. So in the example that I go through on one of the other videos, $9,000 a month less for $2 million in mortgage more. And so it helps with cash flowing. Plus, to qualify, they actually lower the debt coverage ratio to make sure that people can qualify at the higher loan to values. So there's a ton of benefits with this program. My fear, again, I keep coming back to this, CMHC, every great program that they have, people apply for it. It disappears because they just want to mitigate risk. They say, okay, we've hit our targets. We've done the number of deals that we want to do. We're done. And typically it's June when they make those announcements. In addition to that, the Accelerator Fund is supposed to, be a Canadian fund that's 2027, 2028. It's been so successful that municipalities are fearful that those funding requirements are going to be hit, and it's going to be done in 2026. So they're really pushing for projects to be permit approved and building permit approved and shovels in the ground in 2026 so that they can offer all the programs that they want this year and not worry about, oh, we've offered this and now we're not getting any money from the federal government to actually implement it. So again, when we talk about opportunities right now, regardless of what's going on in the world, you have an opportunity right now because people still need housing, and there's no shortage. So,
Oh, awesome, Brett. Thank you for the breakdown. And this is again in my vision, this sort of program that's on right now that again might be disappearing soon is literally the type of thing that can give you a huge jump in because those you'll see these people and they've got 30 or 40 properties, sometimes more, right? And you go, oh my gosh, how could somebody do that? Well, you start with one and then you pull the equity from that one and you keep that ball rolling. And this gets that ball rolling with a shove off the top of the hill versus pushing it uphill a little bit. So,
yeah.
yeah, very
And
cool.
you look at somebody like Grant Cardone, and again, love him or hate him, right? And it doesn't seem like there's a whole lot of in between, but love him or hate him, he's a huge advocate of multifamily.
Mhm.
And when he talks about multifamily, it's because you can have the property managers, you can have the economies of scale, you can do all these things. Plus, you can have the best single family property in the world in terms of a rental. But if the comps around it are all selling at a certain level, it does not matter. It won't go above what those are selling for. Whereas with multifamily, they're looking at what's the cap rate, how does it operate, like what are the what's the net income, period, right? And if you're doing a great job with that, now all of a sudden it's valued way above, and you can refinance again.
Yeah, that's awesome. Very good.
Right.
All
But
right.
closing thoughts, Amelia, like what's the one thing you want investors to walk away with from this conversation, or what do you want me to walk away with? Because I take stuff too.
I think I like to think we all take things away. I think if anything, it's just and this goes for all things around, I know for my business for sure, is that you cannot do enough research, you cannot do enough education, you cannot do enough planning. Let's make sure, let's have 10 conversations if that's what it takes with all the right people. Don't just do what your buddy tells you or what you see media or social media or ChatGPT, who I've realized lies a lot actually, suggests is a good thing to do. Do the right research, talk to the professionals. If you have a great realtor or a great mortgage or a great financial advisor, those are great places to start. If you don't, love to hear from you, either one of us. So, yeah.
Yeah. Well, and I love having conversations with accountants because you put the numbers in front of them and they're like, "Hey, this is great." Our first set of investors that we worked with was a group that was referred to us by their accountant, and we had gone to him specifically and said, "Listen, here's the numbers. We want you to verify these, right? That we're not out to lunch because we think it looks great." And he's like, "Oh," yeah. So he went through, and this is an accountant's accountant. Like he's uh, just ripping apart the numbers and he went through, this is really good. And we're like, "Okay, well, what do you think?" He's like, "Well, um, do you have investors lined up?" We're like, "Well, no, that we want to go to you first because we don't want to give our investors anything that's not legit." He's like, "Oh, why? I would like to invest." Like that's great, like fantastic. So he ended up coming on board. He had a few of his friends who were clients came on board as well, and that deal there, we ended up. They walked away with 100% rate of return. It was a little bit less because it took 13 months to put together. So it was like a 94% annualized return. I think they were okay with that, but it was one of those things where we love sitting down with accountants because they will crunch the numbers. And it's not ChatGPT just going through and saying, "That's a great idea," right? Like, oh, like I don't need sunshine blowing up my keister. I need legit facts and I need to know what hurdles we're going to face if I'm missing something. So we love sitting down with accountants. Um, Lawyers,
Every
anyway,
profession has amazing people and people that you got to wonder how they got into it. And this goes for accountants, for realtors, for lawyers, for all professions. Again, when dealing specifically with investments or with commercial or with something that's not just a residential home, it's definitely making sure you have professionals that are versed in that area of expertise because a general accountant who does taxes might not be the right person to crunch numbers on an investment, stuff like
no,
that.
no,
And same thing for lawyer and different things like this too. I just want to say that I think that that's about the best testimonial that you could have would be, hey, I went to put it together. I ran it through the accountants. The accountants looked at my numbers and they all invested.
yeah.
That's great.
Well, and that was great. So,
But
um,
that's it, right? The numbers on this stuff, again, when you review the numbers, it's incredible when you look down the road, what kind of opportunities and generational wealth you can create for your family and for your friends and yourself and everything else too, right?
yeah, and we've dealt with them a few times. They have a finite number of deals that they will do. So we've been very fortunate to be part of that. Um, but yeah, we continue to work with other investors that deals, and that's the thing with the MLI Select program. And I keep coming back, and I feel like I'm just you know that's all I talk about these days. But I think it's important enough to focus on at two ends of the spectrum. So you can have those that only want to build, and you can have those that only want to buy when it's built. And I did two videos yesterday because one is geared to, hey, if you want to build a property, this is how you do it, but also to the buyers of the end product where they can come in and take over the corporation or basically assume the mortgage and they can finance that building at 95% financing. Holy cow. Like they don't want to deal with the headaches of dealing for a year with um, you know, construction and that sort of stuff, no problem. But we'll marry the two together, and because there's some people that they never want to deal with tenants, right? Ever, no problem.
This is when I could joke and say, I don't think anybody ever actually wants to deal with tenants.
Yeah,
But
yeah,
some people enjoy it more than others.
yeah. Or at least approach it knowing that you're going to have good and bad, and again, but it's why people hire a property management company, because you 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 want to get reports on the bad. You don't have to deal with it yourselves. And I've been to the landlord tenant bureau a few times now, and we're spending thousands of dollars to bring our lawyers to accompany us with that, and the tenants who haven't paid their rent or anything, they get free legal counsel. I was like, wait a second, hold on a second, like that's backwards. Like, spend that money on just paying the rent. Like, just those legal fees. Just give me to anyway.
I hear you.
Yeah, yeah,
But again, this is why it's good to have the right professionals around, you know, prepare for the worst, plan for the best, and do everything to make sure that the best course, the smoothest course, is the way it turns out. I know I've had really good luck with very heavy vetting of tenants. Again,
yeah,
you don't want to take the first person who comes along who's going to pay the rent. You want to make sure you're putting somebody in who's qualified, who has a good payment history, who has the ability, and all these sort of things too. But that
yeah.
feels like a whole other conversation as well.
I think we had a tenant that you turned down that we brought to meet with you.
I,
Um,
I'm pretty picky for my landlords.
100%. Yeah, this was over. It wasn't on Zadok, but it was over that way. Um, nice house, and um, I think he made the right decision because we get calls. She pays her rent. She just has a headbutt attitude with her landlord. So we get those phone calls from her saying, "How do I talk to my landlord about this?" And yeah, so fun stuff.
All yours.
Yeah, no, that's great. Last thought.
I don't know. Great to catch up over conversation. I don't know if hopefully somebody got something listening to this today and took something away from it. Would love to hear any questions, any requests for conversations on other topics or more in-depth talks about anything we touched on today. Please enter in comments. Let us know. I think we got to tell everybody like and subscribe and all that good stuff if you'd like to
Yeah, do
see more of us.
we point up to hey, click on
I'm
the
not sure which to point. I don't know which way to
no.
point, though. I'm not
Yeah.
schooled enough yet on these things.
Yeah. No, that's great. Let's just do this again real soon, and we'll get Rayanne on here too, and we'll do the full Naked Real Estate podcast session, and go from there. But we want to have a whole stable of shows done before we release anything. And some of the stuff we were talking about today is fairly timely. We don't want to just sit on it, so let's get it out there. But that's great, and we'll talk soon.
Awesome. Thanks, Brett.
Thank
Bye.
you.
Bye, everybody.